So I want to welcome Diane, David, Chris, and Jared to the panel. On the screen, you'll see that Mark has grown a lot of hair and a beard. Mark was not able to make it. I think he got caught up in some of the hurricane stuff going on down south. I had kind of a little observation, epiphany, that a lot of panels are so structured that they really don't explore the full topic. And so today, what I wanted to do was have a panel with no moderator. No moderator, I know. Yes, exactly, I know. A little scary. Not really. But the idea here is for a conversation and where you guys are really just listening into the conversation. Now, after probably about 15 to 20 minutes, you guys can ask questions through an app. Tanya, amazing. She put this whole thing together. If you take out your phone and go to slido.com, you don't have to download an app or anything like that. Just go to slido.com and enter in that code. You can also use the QR code. You'll be able to enter a question, and then it's going to pop up on my phone. And if it's a good question, we'll post it, and the panel can cover it. So I am going to start off with the first question, and then I'm gone. Okay, so the first question, which is something we talked about a couple of weeks ago, was an obvious question. Rates going down a little bit, EPOs, how are you handling that? And take it away. Chris, why don't you start?
So I think when we kind of chatted, getting ready for this, and this all kind of goes back to a dinner we had together with one of our TPO partners, and it was fun. We just kind of shot the bull and talked the business, and I think that was where Brian kind of got the idea of doing this. But right now, churning our pipeline and avoiding EPOs, we want to do both, right? Everybody who's done a purchase loan the last couple of years is most likely going to be refinancing, and I wanted to know what you guys are doing. I know what I'm doing right now, but what are we doing to, one, avoid EPOs, and then two, to set us up to churn our pipeline, hopefully not just once, but 2 or 3 times over the next coming years as we see, Fed rate cuts. So I'd love to hear what you guys are doing with that.
I'm kind of prepping everybody before, while I'm doing their purchase, right? And I'm talking to them that we're going to refinance you in the future, but we have to wait 6 months. So I'm telling them they have to wait 6 months. And again, just prepping them. And then between now and the 6 months, or what I've been doing is just keeping in touch with them, letting them know that I'm watching the rates for them. When we get ready, it's not quite there. That's kind of how I...
Are you going through every month and looking at people and sending them messages individually, or do you have like a system that does it?
Yeah, you know my system, Jared. It's all in my head.
Di and I go way back.
I'm just kind of going through like in the last year, like loans that I've funded, and that's kind of just been staying in touch with them. And maybe it's within a month, maybe it's in a month and a half, but I am just picking up the phone, calling them, checking in to see how they're doing, how's the house, remember I'm watching for the rates, that kind of thing. So, I'm just letting them know and reminding them. I'm sending an email, hey, I know you've heard of the news that, rates are coming down. I just want you to know that I am watching for you. We're not quite there yet, but I am watching. That kind of thing.
So you mentioned something interesting on EPOs. You're telling people you cannot refinance within the 6 months. I'm doing it slightly differently, okay? I'm doing what I call like throw yourself at the mercy of the court strategy, right? So I'm very honest with my clients. Like, look, I take most of my loans, 99% of stuff I do LPC, right? So look, my firm is not charging for our services. We don't charge a processing fee. We're allowed to, but we choose not to be competitive. And just so you know, I get paid a one-time commission on the back end from the bank I'm brokering the loan to because they want to collect the interest from you. There's no negative repercussion if you refinance this loan within the next 6 months. However, if you do that, I'm gonna get a bill in the mail for 100% of my commission, and I've got a wife and 2 kids and a whole staff here that rely on me making money. And so please, I ask for a professional courtesy. Please don't refinance within the first 6 months. We can look at this 4 months from your funding date, possibly do a 60-day lock, 5 months from the funding date, and fund it on the 181st day. So I'm doing a slightly different strategy where I let them know you have that opportunity. I genuinely believe most people are good people, and 6 months is quick to refi anyways, and they don't want to take your commission away. So that's the way I'm kind of approaching that. And I do it like you on the front end when I'm doing their purchase loan.
Yeah.
Real quick, Chris said, I do it, so I just want to highlight that for anyone else.
I do?
He does it.
I got 2 kids. I think they know that.
It is interesting to hear this conversation just unfold naturally because we all do have different strategies. I do the same, but neither, and it's just funny because we're all after the same thing. You'll hear me, systems and processes are everything. So for us, as soon as we fund a loan, we use Arrive. We create a price alert for that exact scenario, and for the rate what we want it to be. And so then we tell the clients like, hey, everything's white labeled, right? So it's just marketing like, hey, we're setting you up with our rate shield algorithm that's going to run your scenario hundreds of times a day to find the exact moment that will make sense for you to refi. And whenever we're asked questions, if I'm ever asked the same question twice, we need to address it in our process. And the questions I get a lot are, why is my loan being sold? Mm-hmm. And no matter how many times you tell them, do you do refinances? I'm like, are you serious? So who's buying most of the loans? Mr. Cooper, Mr. Pooper. And what are they doing? They're hitting them up constantly. And so you want to get ahead of it. And so what we do, we don't mention the 6 months. We don't mention EPOs. What we do is 2 weeks post-close, we say, we send out an email to those clients as a heads up, your loan is most likely going to be sold. Here's what you need to know. And we explain why loans are sold, because you're not going to hold this loan long. So who would buy this loan? Terrible lenders who cannot get business on their own. This is the only way that they can hope, and they're going to try to trap you in a really shitty refi. Do not fall for it. We handle refis for you. We've set up this algorithm, Oh my God. Who's going to EPO them? The servicer. They're just proving my point because they're going to say, oh, the spam. Oh, he warned us. Let's just wait for him to reach out. I've never been EPO'd.
Better knock on wood.
Doo-doo.
I've been lucky enough not to be EPO'd either. Other thing I'm curious about what you guys are doing. So when I'm trying to turn my pipeline, we did this a lot in 17, 18, 19, 20, right? We did many clients 3-4 times as we stepped them down in rate. And I think we're heading for another environment like that right now. Yeah. So I've got a few refis that are funding today and a few more originated within the last week. And are you guys doing your best? I know in smaller loan amounts it can be hard to get yield spread on the back end and cover 100% of the costs, because that's what I'm encouraging my clients to do. And I'll give them both options, right? Hey, here's a no points rate. Closing costs for me, what, $3,500, $4,000 or something like that, at least in California on most of my loan amounts for title, escrow, appraisal, et cetera. And then I'm giving them the slightly higher rate with enough yield spread, or maybe that's an old term, lender credit on the back end to cover the costs. And then I do a buyback calculation, right? Here's the difference in the 2 monthly payments. You're not going to get your closing costs that you invest in this refinance back for 36 months. I think there's a really high likelihood that you refinance before that 36 months. And if you didn't pay any closing costs, you got no skin in the game. So we just do the paperwork again. And it's also self-serving and to an extent because they're an eighth to a quarter higher in rate than they would have been at a par pricing. And so it makes it easy for me to turn that loan over again next year. You guys doing any of that?
I used to say, I'll cover all your closing costs until those tiny loan amounts hit me. And I was like, oh, doing these loans for free. So I actually now tell my clients during the purchase process, like, hey, I honor every single client that I did their purchase. I'll refinance them for life with a $2,000 credit to cover most of the closing costs. Because that covers me, whether it's $1 million loan or $200,000 loan, at least I'm going to still have some skin left in the game.
And are you doing that by dropping and going BPC, or are you doing that with lender credit on the back end based on the rate you choose?
Honestly, case by case. It depends on loan amount, time of the market, case by case. I don't really have a formula for that, but I do try to communicate with them multiple times through the purchase escrow, and then we have a 30 days after closing, another reminder that, as rates come down, keep me in mind. And then we throw them on HomeBot, which I'm obsessed with, so that kind of monitors it for me.
I basically do the same thing. I'm, depending on where the person's rate is, they're anxious to get refinanced, and even though you might be explaining to them about all the costs are included in the higher rate, everyone's hearing rate. So I'm finding that my clients right now would rather finance the cost and get that lower rate. They're just focused more on that lower rate. So
and I get that. I'm just worried 12, 18 months down the line when rates are lower and they've increased their loan amount by the costs, they left money on the table. And maybe I look at things too analytically. For me, it's very black and white. It's numbers, right? That's just the way my brain works. I don't have an artistic bone in my body. And so for me, it's why would you invest money in closing costs when the Fed's come out and said we want another 50 bips possibly by the end of the year and possibly another 200 bips over the next 6 quarters? We are going to see lower rates. And so I truly think if we can educate our clients into letting us cover the costs, it puts them in a better position where they're more agile and they go to do that second or possibly even that third refinance.
I'll chime in again. So part of our SOPs, we set the price alert, and I always set it to 0.5% to go off. So Arrive's running those scenarios, and when it hits, it emails me, hey, rate alerts went off for these clients. So our SOP is when that rate alert goes off, we clone the file, we set it up for a refi, and we send the clients a text saying, hey, as promised, I've been watching rates for you. I'm not quite sure it's time yet. If we refinance right now, we would be shaving X amount off your monthly payment, but you'd have to bring this to closing. Where are you guys at? Because in so doing, you're giving them the opportunity to go like, you know what? That's a win for us. Money's tight, such and such. Or they'll go, yeah, I agree with you. I think the easiest way to establish credibility with someone is not pushing them into something. So letting them know, hey, I'm not sure it's time yet. They know you're not selling them so that when you do present something further down the line, but you're also giving them the opportunity to go, hey, that would be a win.
Yeah.
And if they say, you know what, we're not sure it's time yet, that's when we're establishing the real strike price. All right, let's figure out what that number is. So next time I see it, I'm just going to straight up lock it for you. I'll pull credit. Is that cool with you? Yeah, cool. And we're doing refinances now without even telling them. Like, hey, by the way, we locked you. Disclosures are coming out. And they're like, sweet, thank you.
Wow.
You got to tell me how to do that Arrive alert thing. I didn't even know it was a thing.
I didn't know how to do
Who else
that
knew
either.
that? Nobody? Yeah, like 2 hands.
I'd love to know that. I don't know how to do that either.
Does Sifter do that?
No, LoanSimster doesn't. So if you look in Arrive, the top bars, there's one that says rate alerts. So part of our SOP is as soon as they close, we create a rate alert for that client. You put their name in, you put, hey, this was a single family residence, it was a primary, this was the loan size, these are the lenders I want you to price it in. You can do BPC or LPC and how much the spread you want it to be. And every time you run pricing in Arrive, it's running those scenarios with the lenders you selected so that when it finds that rate, it's going to send you an email.
That's awesome.
That's pretty cool.
Well, that's really cool.
I did not know that.
Jared, you didn't know that? You always know everything.
I have a question. Yeah. What is your biggest pain point right now? What is causing the most friction in your business? What's causing you to chafe?
21-day escrows and 10-day contingencies. No, I mean, all jokes aside, that's kind of become the regular market, right? I mean, I'm excited for a time where we get a more balanced market and go back to 30-day escrows, but agents don't understand that portion of it, right? They don't understand what it takes to get it done. So I get asked all the time, can we do an 18-day escrow? And I'll say, you can write an 18-day escrow. I can't promise I'll close in 18 days. I promise my agents I can close in 21 because we have wonderful wholesale partners here that can get it done in 21 days. And it's a grind, and I don't think it's a great experience for the buyer. That's who I feel the most sorry for in those situations. And sometimes they need it to get their offer accepted, but especially first-time home buyers, a 21-day escrow is a whirlwind. It is quite a shit show while they're going through the process. So, 10-day contingency, same thing, like an appraisal contingency. I can't promise 10 days. I can order it day one of escrow, and then it's out of my hands right there. So as long as you're honest and set expectations, it's okay. But I'll still have agents that, we're on day 11, I don't have an appraisal in, and they want to knock down the door. And it's like, well, I told you up front, don't write contingencies that short. So that's been my biggest pain point, is educating my agents on what these short time frames mean and how we meet them.
Yeah, I feel like on that, what I've learned to do is ask the agent, hey, did you talk to the other agent? Like, do they care if we go that fast? Because 9 times out of 10, it's the freaking agents that want to go fast. Yep. The buyers and sellers don't care. I mean, so anyway, my biggest pain point for sure, insurance and condos. It is, because I work in SoCal. I know not everyone does here, but good Lord, where I live, insurance, we're now quoting like a 0.4 to 0.5% factor. That's almost triple what we used to quote. And then the condo complexes in our areas, they can't get insurance. They need $400 million of coverage. Each carrier will roll into 100, so they have to get 4 carriers to sign on. It's a disaster. It's like every third or fourth condo is non-warrantable now. So hopefully that fixes soon.
Even on the condos, the HO6 policies, which used to be so inexpensive, those are running $1,200, $1,500 a year now for a standard walls-in policy, which is crazy. Those used to be $400 or $500 annual policies.
Have you started getting quotes prior to offers?
So I won't get quotes My agents may, I'm not. I get quotes day one of escrow. So I have 3 different insurance brokers. They all actually know each other and bounce business off of each other. I've introduced them. They met through me. They immediately get an email from my staff. I don't have enough time to do it, but everything they need to quote it. I have a sheet that they've sent me, everything they need to quote it. I get 3 passive quotes from my clients without connecting them at all because I don't want them to feel overwhelmed. I pass those passive quotes along, have their contact information, and I'd say more than 50% of the time they're probably working with one of my 3 insurance agents. But I am proactively doing that day one of escrow when I'm lock and loan, sending disclosures and all that stuff.
I'm starting to get quotes before they accept an offer. I mean, just because number one, how close are we on our ratios? Number 2, are we estimating correctly? Is it going to be a tough, area?
Fair plan.
Pardon me?
Fair plan.
Yes. And those are going to make a big difference even in the buyer's expectations. So, talking with the agents, asking where this property is, oh, it's up against the hills, or oh, it's over here. Let's get a quote first to make sure that the buyer's on board, because we certainly don't want to open up escrow and then even 3 days in go, oh my gosh, this is crazy, and then end up backing out. So I'm starting to do, depending on where the property is and what they're looking at, I am starting to get some quotes before they write an offer.
Diane, what's your biggest pain point right now? What's causing you most friction?
Insurance and condos.
Well, and the condos, a lot of times the agents don't know what's going on with the condos, right? So it's like when an offer goes in, especially day one escrow, if they're writing the offer and it gets accepted, I'm asking immediately to be connected with the management company or whatever, because I want to kill that thing right away if they don't have proper insurance and it's a non-warrantable, right? And a lot of times the listing agent doesn't even know. I had one in Orange the other day that it went non-warrantable a week and a half before escrow was open. Agent had no idea. Property had been on the market for 3 weeks and insurance expired. They couldn't find new insurance, and they still are looking for insurance. That entire complex of 300 plus units is non-warrantable. So that stuff, I don't know if the pain point on condos goes away anytime soon is the problem. This insurance issue is a big problem, and it's a bigger problem with the HOAs because a lot of them are deficits having $10,000, $15,000, $20,000 special assessments per unit because the premiums on their master insurance policy has gotten so expensive. I don't know what we do about that other than do the research as quickly as possible and try and kill deals if they're non-warrantables or move them to a non-warrantable lender, but I don't do a lot of those.
And then how are you finding out though? Are you just calling the HOA? What are you doing?
I'm calling the listing agent if my agent doesn't get me the information, and then I'm getting the name of the management company, and I'm chatting with the management company, getting a copy of the master insurance policy. Most of them are on EOI Direct or one of these, services where you can get it online pretty quickly. But I'm asking that question right away. Like, I need to know if this thing's attached, and as any shared walls, even if it's a PUD, it's not just condos, attached PUDs are very similar. We got to make sure we have the right insurance.
Well, then also I heard that I was talking with Jody and Shelley last night that they were saying each condo complex has to have an inspection on their balconies for January 1st. And that's causing issues as well because now a lot of these complexes are having, a premium added on. I'm forgetting of the word of that. But anyways, that they're adding an additional premium to the homeowner for an additional cost of the HOA.
You guys, I'm sorry to interrupt. I could literally sit here all day and listen to you. Has this been helpful? Is this great? I knew this idea was going to work, and I'm so excited it did. But before we completely run out of time, I wanted to test some of the technology here. We did get a lot of questions, and I'm going to post. Let's see if this works real quick. It's supposed. There we go. So the question that's been asked is how do each of you handle processing, particularly with the idea of scaling? How much or how often do you charge for processing?
David and I talked about this last night at dinner.
Great.
We have a guy on staff. We've had a same processor on staff for 10 years. When we scale, we'll hire an assistant. We used to have up to 4 different processors. I know a lot of you contract process. I like to have them in my building working on my loans. When he's gotten slow, I've given him the option to contract process. He hasn't been interested, but I really enjoy having someone on staff. I understand that's not, I'm part of a team. I have a business partner. I understand that's not financially, doable for everybody, but that's the way I deal with it.
Yeah, I've been third party ever since I've joined C2. I have a couple processors, so if I ever get overload, I send them over to the option number 2. But yeah, my number one guy, he charges $9.95. We charge it to the borrower, and I don't think I've had borrowers ever complain because I roll the underwriting fee into pricing, and our pricing's always good anyway.
Yeah.
So
Yeah, that's exactly what I do.
for VIPs, I'll cover the processing fee out of my pocket, but whatever.
Yeah, it all depends. But I'm third party.
I do like that idea of rolling the underwriting fee into pricing, because I'm mostly doing fees out pricing, because a lot of people are, but I'm not charging a processing fee. So I like that. If you're going to charge processing, I thought that was a great nugget right there. If you're going to charge processing, go with fees and pricing, because if they see an underwriting fee and a processing fee and they go and shop you, you're in trouble there.
Yeah, and if your loan amount's like 750, it barely changes the rate, so it doesn't matter.
Yeah, I use third-party processing. I'm Arabic. I negotiated with the processing companies, made them fight for me, and we got a good deal. I was going to say this. I'm not a tax professional. In another life, I might have been. But I always bake in the underwriting fee, even if it converts to dollar for points. Why? Because you can write off points. You cannot write off a fee. So then I can explain that, like, hey, it says you're paying this in points. You're not. There's a baked-in underwriting fee. The reason I did this was to help you. You can write this off on your taxes. And they're like, thank you. You're welcome. And you just keep moving. So it's just how you structure it, how you package it.
Now, is that on a
That's,
refi or a purchase?
On everything.
Well, I thought when you refinance the points, you have to amortize that over the life of the loan.
You can
Yeah,
deduct it. It's the
okay.
point where you couldn't. If it's just an
okay.
underwriting fee,
Okay.
it's just a flat cost out of pocket. So.
Okay.
Question that came up was, what states are you working in? What states are you licensed in?
California, Colorado.
California, Texas, Arizona.
A state of emergency constantly. Washington, Texas, Florida, Alabama, and Tennessee.
California.
Great. I'm going to do a couple other quick questions here.
How tall is Brian Kent?
Hey, whoa. Wait, where's...
Bum, bum, bum.
It is the subject of controversy. Especially when I stand by Brad. Here's a question from Rob. You have a meeting with an agent. They're elated to say they'll send you their next buyer. You never get a referral. You follow up, check in, but nothing. Now what?
How long have I checked in?
Wow. Yeah. I'm not going to have those answers. Say 6 months.
So I'll normally drop an agent if I get ghosted for about that period, 6 to 9 months. I do Friday text every single Friday to half of my agents, so they're getting a touch minimum, if we're not working together on a transaction, a minimum of every 2 weeks. I don't want to overtouch, but I've split my agent list in half. They get a personalized text Friday afternoon. Hey, I'm working all weekend long. You need pre-approvals, you need cross-quals, you need open house flyers, that whole thing. And so I'm touching my agents every 2 weeks anyway, so I should be getting responses. But keep in mind, as far as like the part where an agent hasn't sent you business and they said they would, agents are struggling right now. Your agent partners are struggling just as much as you, if not more. So it might be that you're still their number one option and they haven't had a buyer in 6 months. There are many real estate agents out there that haven't sold a property in the last 6 to 12 months. That doesn't mean that you ignore them. If you're getting any kind of response when you follow up with them, then keep them on your roster. And they're gonna get busier again when we get to a more balanced market. And as rates go down, they're gonna get busier. So just because you haven't received the referral doesn't mean they're not looking at you.
Yeah, I would say, again, I already mentioned I'm obsessed with HomeBot. Any HomeBot people in here? Okay, good. So if you haven't used it, that has the little Intel feature. Have you guys seen this? It's a new thing. They're going to start charging
No.
us.
It's like MMI, Redder.
Yeah, you can spy on your agents. So Brian, like you said, if they haven't responded for 6 months, I'm going to first go onto HomeBot, see if they've done any business on the buy side, because it gives you all the data, and if it does show data, it says which loan officer they did it with. So if I look at an agent, they're not responsive, that's my first step, and I see that they've done like 15 buy sides in the last 12 months, but 14 are with one guy from US Bank, I'm probably going to stop barking up that tree as hard as I used to be. But if, like you said, if they've done no business, but they have a history of doing business, I'm going to keep barking up that tree.
Or if they've done 2 or 3 transactions all with different lenders. I mean, sometimes buyers are bringing their own financing, and you get that, the higher price points especially, because they've got a financial advisor and all that, they're gonna be bringing a lot of their own lending. So.
I'm a weirdo on this. I've never asked an agent to send me business. And when I got into the industry, I kind of realized the power dynamic of here's realtors, here's lenders. And I just like, hey, can we take you out to coffee? Can we do this? Can we do that? I have a rule of thumb, never call an agent unless you have something of value to add. Never ask for business, constantly add value. And when you never ask them for business, they start to go like, what? And sometimes I'll like give them stuff. They're like, I really need to send it to someone. I'm like, you know what? I'm good. I just want to help you close more deals. If it was a charity case and you flip the power dynamic like we do a weekly 2-3 minute market update video that blasts out to all the realtors. And so honestly, like I probably have followed up with them passively. And so there's agents I thought like, oh, I thought we were good. I haven't heard them in a year. And then all of a sudden they start sending me leads because they've been slow. And they were always in my pen. I just didn't know, and it didn't press them, and it didn't make them feel like they owed me anything. So,
What CRM are you using?
David Kakish, do it manually.
Di, what are you using?
I don't think my mic is on, but Elo Ninja is here today, and they're doing a breakout, and they're doing 50% off for 3 months.
Wow.
If their breakout's during mine,
David Kakish is doing a breakout, but Elo Ninja, I think, is one of the few CRMs that integrates with Arrive. So there's not any double entry, just as a heads up. All right, we got to kind of wrap up, but like I said, I could go on forever. One last question. How do you make the leap from individual producer to bringing on someone to handle closing your deals? It's hard.
That's a hard one.
Yeah, it's a hard one.
I've spent 10 years trying to do it. And,
I have a suggestion. I'm sorry, I didn't mean to interrupt you. But because our time is pretty much up, we have a happy hour at 4 o'clock. I think we're going to put this exact table with these exact people in the happy hour room, and we can just have beers with this group
But
here.
instead of water, I want Prosecco. I know I said I was going to bring my bottle. That was a miss this morning.
I did promise mimosas, but we are in school, so, you know. So, okay, I think we're going to wrap up. Thank you so much to the Roundtable today. That was wonderful. And I'm going to pass the controls back to Jay.
Check, check. Thank you, guys. Thank you very much. That was terrific.